Um, Interesting times also for the entire hospitality industry. Kavinder Singh joins us, Managing Director and CEO with Mahindra Holiday Resorts Limited. Mr. Singh, good morning. Thank you for joining us. Haven't interacted with you in a while, so always good to connect with you. Prima facie, let's understand things for the quarter gone by. I don't want to dwell too much into your bottom line by because, we understand that there is always this element of you have to keep on, parking money because of the accounting policy you follow. So I'll not spend too much time on that. But let's first understand the big picture. This is boom time for the hospitality industry. Are you enjoying the joyride?
So I think this is something that I wanted to share with your viewers, that we have a strategic objective which we are pursuing now, from growing our room base of about 5,000. As you know, this quarter we touched 5,000 mark. We want to take it to 10,000 over the next 7 years. That's the big picture. So the joyride is on, and we will definitely move towards our strategic objective of doubling our room count in about 7 years. Having said that, even at a financial metrics level on standalone, this quarter turned out to be the best ever quarter for us in terms of the income, which grew by about 17% at about 355 crores if you exclude the one-offs, as well as the EBITDA, which crossed 100 crores mark, which grew by about 19%, and as well as the PBT, which was up by 19%. Also, our member additions were very robust at 23% growth on YOY basis. And parallelly, we acquired a resort in Jaipur, a 72-key resort, which will expand further. And we also broke ground on a 236-room resort in Ganpati Phule. And we have 800 crores of capex already in play, and we are moving towards our strategic objective of doubling our room count.
Now let's understand that if I look at the revenue, 614 crore versus 600 crore. At a time when you're using the word joyride and occupancy levels are high, and almost all hotels and resorts are are reporting strong levels of occupancy, the top line is flat.
All right. So what I was explaining earlier was the standalone results of Indian operations. And that is where the top line is about 17% growth on YOY basis. On a consolidated basis, you are right, we are flat. And that is largely because we have Holiday Club Resorts, which is the Scandinavia-based company, Finland-based company, where because of the fact that we have high inflation there, Euribor is at about 4.2%. Having said that, despite that, the timeshare sales there was good because people, Finns love to buy second homes. They can't afford second homes. They're buying timeshare. But in the spa hotels, the occupancies were low. It is seasonally weak quarter. Plus, the consumer sentiment in Finland is low right now. As you know, Finland is in a technical recession. Their GDP turned negative in the last 2 quarters. So the effect is something that you see in the consolidated results. But what I was passing through was the standalone results, which is where I was mentioning that we had the highest ever performance, and a 90% occupancy on a 5,000 room base is something that we were extremely happy about.
1,000 number, when does that become 10,000? Since you referred to it, you said very soon. Define very soon for us.
So we are looking at a 7-year period, 2030. In 7-year period, what we did in the last 26 years, we came to 5,000 rooms. We want to now achieve that in 7 years now to make it 10,000.
How is it that you sort of make hay while the sun shines? And it seems like the sun is going to shine for the next 7 years, like you just highlighted. What is the capacity expansion that you're looking at? Any new resort additions? How is it that you actually, grow your member additions?
Yeah. So there are two questions in one. How do you grow your inventory? How do you grow your members? And these are the most important metrics for us. You can see already that we are now at about 286,000 member base. We would like to grow this member base in line with our room additions. And room additions typically have been robust in the last 3 years. We added about 1,200 rooms. We are accelerating that by investing into our own resorts as well as acquiring. And of course, the leasing always remains an option subject to meeting our standards. So just to give you a heads up, we have at this point of time a 200 crores capital investment program going on in our existing resort in Kandaghat, which will become now after the expansion will become a 230-key resort, bringing in economies of scale. And I also talked about 250 crores investment in Ganpati Phule, which is again going to be a scaled up resort, which will really help us to take economies of scale. And of course, people going to Goa would stop at Ganpati Phule. And of course, as we speak, the Goa resort is being expanded by 50 rooms. It's already a 200-room resort. It will become a 250-room resort. We have Puducherry. We have a resort of 125 rooms. This will become about 190 rooms. We are expanding that as well. And we are putting up, we are breaking the ground as we speak in Theog. We are going to, which is in Himachal, we'll put another 150 crores there, 150 rooms there. So as I see, about 800 to 850 crores of investment is already at play, which is in line with the strategic objective that I outlined earlier of making our total room inventory count go from 5,000 to 10,000 keys in 7 years' time. And as far as member additions go, which was your second question, we grew our member base by about 23% on a YOY basis. If I were to take it compared to the same period last year, we launched a new 4-year product this quarter, which is getting good response. Last year, we launched 15-year product. We have increased prices in April, May, June. So we are looking at member additions with lots of confidence, because as we now embark on a path of expanding our inventory, we are very, very confident that members will come and keep filling our resorts, as you can see from the 90% occupancy that we got in April, May, June, the quarter that we finished just now.
Kavinder, on a not lighter but serious note, you should be looking at cashing in on the World Cup opportunity. I mean, reports are indicating that capacity is already full in Ahmedabad for the World Cup, and people are even booking hospital beds from what we understand.
Yeah. So our business model, as you know, is focused on members and first come, first serve. So we really don't sell our rooms to make money during the World Cup. So we won't get any kicker as a result of that. But the good part is that our resorts are already looking full, whether in Ahmedabad or whether in Dharamsala or wherever the matches are being done.
And Mr. Singh, hi, morning. Avan joining in. You have, I think, seen pretty healthy occupancy growth, around 90%, if I'm not mistaken. What is it at, and what levels look sustainable?
So 90% occupancy on a base of 5,000 rooms in April, May, June is a dream come true. We also reached highest ever resort income, which grew by about 10% in this quarter over the same period last year. July looks a little muted, as you know, because of the heavy rains, but still we are looking at 78 to 80%. This period is generally lower, but what we also note is that while April, May, June is a low season quarter in Finland, but July, August, September is a high season quarter there. So while we have a bit of a low season quarter here, but we will have a high season quarter in the holiday club resorts. So that is something that we are looking forward to, because the peak holidaying season in Finland has already started.
Okay, thanks so much for taking time out and joining in and giving us a little bit more clarity on the financials. No doubt it has been a bit of a soft quarter for Mahindra Holidays, and that stock is under a bit of pressure. We'll take a very quick break right here on the show. Be right back as get you Chartbusters and review a whole host of earnings.